Hello everyone, and welcome to lesson number 2. Today we are going to talk about why you should trade Forex. There are many benefits and advantages of trading Forex. Here are just a few reasons why millions of people are choosing to trade in Forex. The first reason is, you can work anywhere. You can work from home, from a coffee shop, and even sitting on the beach. Most traders have a small home office with a multi-screen setup, and they work from home. You can make really excellent money. If you can learn and understand Forex trading, you will have a skill for life, and you will earn money from Forex every day. Another powerful reason is, no more 9 to 5. Yippee! Forex is the first step to escaping the 9 to 5 daily grind. You can choose when you want to work and when you want a break. Forex has empowered many traders to achieve financial freedom and be free of debt and money worries. You can work hours to suit you around your lifestyle and your family. Forex is a 24 hours 5 days a week, and you can trade anytime from Sunday night to Friday closing bell. I hope that has given you a quick insight into why you should trade Forex, and we will now start the lesson and give you in-depth information about trading in Forex. Before we jump into the lesson, a quick disclaimer. Smart Forex Trading offer educational videos to help and educate Forex traders. Information on this channel is for educational purposes only and should not be considered financial advice. We must advise you Forex trading carries a high level of risk, and you should be aware of the risks before trading in Forex. Make sure you like, subscribe, and turn on bell notifications. It really helps the channel to grow. Let's now start with our lesson for today. Forex trading is a 24-hour market and you can trade anytime. There is no waiting for the daily opening bell to ring. The Forex market opens on Monday morning in Australia to the Friday afternoon close in New York. The Forex market is 24 hours over 5 days Monday to Friday. This is awesome. For those who want to trade on a part-time basis, because you can choose when you want to trade, morning, noon, night, during breakfast, or in your sleep. Thank goodness it closes for the weekend, as we all need our precious rest. If you don't get a break, you can soon burn out. Another good thing about Forex trading, there are no commissions to pay to brokers and there are no trading fees. No commission, no clearing fees, no exchange fees, no government fees, no brokerage fees. The only cost you have is the broker's spread. This is the tiny difference between the buy and sell price quotes. Typically this can be as low as 0.5 for a trade with a euro-dollar trade. You can trade with any amount from as low as $5 to $5 million or more. When trading in Forex, you can choose the trade size according to your account value. You can start as low as $50 or $5 million. Some brokers will even allow you to open a micro account with $500 to get you started. Forex trading has some of the lowest transaction costs. As I mentioned earlier, there are no commissions and no fees to pay. The only payment you have to make is a small transaction costs known as the spread. The broker's bid/ask spread is typically less than 0.1% under normal market conditions for trading euro to dollar. For larger transactions, the spread could be as low as 0.07%. Of course, this depends on your leverage. The spread will also depend on the market you choose to trade. For example, for currency pairs it can be 0.5%, for gold it can 0.3%, and for metals it can be 2%. Thankfully, no one controls the Forex market. It is totally open and free market for everyone to trade. Millions and millions of traders are sitting comfortably at home trading and making money from Forex. The Forex market is sufficiently liquid that significant manipulation by any single entity is all but impossible during active trading hours for the major currencies. The foreign exchange market is so huge and has so many participants that no single entity, not even a central bank or the terminator himself, can control the market price. Forex uses the power of leverage to use a small account balance to place a large trade. Don't worry if you are a bit confused by what I just said, as I will explain fully in a future lesson. Just so know, another word for leverage is margin. For now, all you need to know is that you can use a small amount of money to put on a large trade. A quick example to help you a bit more. A Forex broker may offer 50-to-1 leverage, which means that a $50 margin deposit would enable a trader to buy or sell $2,500 worth of currencies. Similarly, with $500, one could trade with $25,000 and so on. While this is all good news, Let's remember that leverage is a double-edged sword. Without proper risk management, this high degree of leverage can lead to large profits and also large losses. You need to learn how to trade Forex to avoid losses. Don't worry, we are here to help you. The Forex market is so big and it offers deep liquidity, and you can buy or sell instantly. Let me explain a bit more. Because the Forex market is so enormous, it is also extremely liquid. This is an advantage because it means that under normal market conditions, with a click of a mouse, you can instantaneously buy and sell at will. You do not have to telephone your bank or your broker and wait for ages for a trade to be placed. You can do it instantly. With one click of the mouse. You are never stuck in a trade. You can even set your online trading platform to automatically close your position once your desired profit level, a limit order, has been reached, and or close a trade if a trade is going against you, a stop loss order. Forex trading has low barriers to entry and anyone start trading. You would think that getting started as a currency trader would cost a ton of money. The fact is, when compared to trading stocks, options, or futures, it doesn't. Online Forex brokers offer mini and micro trading accounts, some with a minimum account deposit of $50. We are not suggesting you should open an account with the bare minimum, but it does make Forex trading much more accessible to everyone. One of the best ways to start trading is to open a practice-free demo account. Most brokers will offer a demo account, and you can learn how to trade using paper money. We really highly recommend you take advantage of one of these demo accounts and demo trade until you are ready to trade live. Demo account is a terrific resource for those who are new to trading and would like to hone their trading skills with paper money before opening a live trading account and risking real money. Most online Forex brokers offer demo accounts to practice trading and build your skills, along with real-time Forex news and charting services. And the good news is, they're all free. Before we end this important lesson, I just want to share with you some interesting information about how Forex has evolved from a market only traded by institutional banks and hedge funds to the point where anyone can trade in Forex. Quick explanation of the two terms used. Institutional traders are the large banks and hedge funds. Retail traders are normal people trading for themselves. A brief history of the Forex market. Forex, also known as the foreign exchange market, or FX, is the largest and the most liquid market in the world. Its retail part came with the development of the internet. This enabled retail clients to trade Forex online via various trading platforms. Forex opened its doors to retail clients in the late 1990s. At this time, the first retail online brokers began their operations. Forex, as a market, had been functioning for decades before that, but it only accepted institutional clients. Currently there are trillions of US dollars traded daily on the Forex market, with retail clients contributing nearly 5% of the total volume, or around $250 billion US dollars in daily turnover. But why is the Forex market so large? Large multinational trade companies, financial institutions, hedge funds, and lots of other companies require foreign currencies to operate their businesses. For those unaware, one currency is bought online for another currency, and this creates quite a reasonable flow of funds. In other words, Forex is the global marketplace for trading currencies. Help the channel to grow. Like, subscribe, and turn on bell notifications. We hope you enjoyed the lesson, and we will see you on the next one.